Today I have some very interesting minors to talk to you about. I see a weaker pound, a weaker Aussie, obviously in different time span, a weaker dollar against the yuan and the Mexican peso. But some of those pairs are also influenced by the headlines. We've had the Fed's Powell calling for more interest, fiscal stimulus yesterday actually, and he's also warned of a slow coronavirus recovery. I don't know why that actually was heard as a surprise. To me, it's never been a surprise. The spat between US and China is actually escalating, to be honest. After US stopped buying pretty much Chinese stocks for pension funds, then there was a new headline that Chinese hackers were targeting coronavirus research. Now what we get next from the China side is that they buy more soybeans from Brazil rather than they do in the US, and this is against the trade agreement that they done, the phase 1, if I'm not mistaken. Now in Europe, the UK is planning to cut US farming tariffs, and that is adding now potentially going to make the situation a little bit more uncertain for the UK's economy. So I'm not going to keep you more on the fundamental side of things. I'm just going to jump straight to the charts because we have five pairs to talk about today. I will go through them quickly. We're looking at this either being 1 and 2 or an A and a B. Okay, so that is going to be either a C or a 3. Despite that, 1, 2, 3, 4, and 5 with wave A, we were looking at this becoming an ABC for wave B. Now we stopped at 23.6 Fibonacci, could go higher to 89.86 and then start moving lower to take out wave C. Now that only I say because I really see this move as corrective. Okay, the other scenario would be that we had ABC and now we're moving higher, but because of this move being corrective, I see it as corrective, then I lean towards the scenario that I have just drawn here for you, and that's why we might be looking for prices to start moving lower, at least for the short term, okay? And then we could move higher to take out wave C. Now, if C was taken out, it's a different story, but I do think that we are going to move higher to the 89.86 and perhaps even to fresh highs after, of course, a short-term correction. Now let's go quickly on pound against the yen. I think we've ended with a wave 5 here. I was looking at this actually as an ending triangle. That's why it ended with an ABC, which means that we are now going to start moving higher, right? That means stronger pound against the yen. 1, 2, 3, 4, and 5. Wave 1 is done, and I'm seeing this as a triple zigzag, okay? Because it is corrective, because it looks like we have, prices not following a certain impulsive or corrective pattern, which makes most of the pattern complex. That's why I'm expecting prices to move down for wave Z. This is near the 50 Fibonacci retracement as well, 129.82 also. Could get even further lower, okay, and break outside this channel just for a forced break. So I wouldn't be surprised if I see prices going down to 129 either, okay? The 61.8 Fibonacci could be around 128 as well. And from there, start looking for prices to move higher when we'll also be able to get a very nice validation signal on the RSI. Next, dollar against this Chinese yuan. We're talking about this opportunity. We thought that it actually failed to move down over here, but we talked about the possibility of this move to the upside, remaining below that high, and that gives us now the confidence. Let's just say that this is 1, 2. We're going to get an multi-structure here, 3, 4, and 5. And that would be pretty much then minor wave 3, then 4 and 5 for more downside, because we still see this as an A, B, and a C. Now I am leaning towards to the downside because we see this double divergence signal. This double divergence signal, when it appears, it's usually very, very strong indication of, some sort of bias. So unless if we actually remain above the 703, then things would be still are certain. If we break to new highs, then I would expect wave B to come up here, and that would become an A, B, and a C. That means 1, 2, 3, 4, and 5. Okay, and then let's go on Australian, Aussie, yen. Aussie, very bad employment data. Still see this as an impulse move to the downside. We're expecting this to happen, so I'm looking for another move down. We get the double divergence signal here on the RSI as well. We get the end of this triple zigzag as wave 4, okay, because it's very hard to call this an ending triangle or any type of other ending formation. And that's because I think it occurred structurally, because this level over here I've drawn is the wave 1, okay. So in order for this to remain impulsive, because we are expecting 3, 4, and 5, then it had to turn a little bit, off. So that, I believe, is an AB, is going to be 1, 2, 3, 4, 5 in multi degrees, as you can see here, although it looks corrective, okay? So it could be possible that we still might just remain around that level before we break down, okay? Invalidation, of course, would be above, I would say, the 71 or so. But I look at this trend line break, the confirmation for further downside. And last, the Mexican peso. We have interest rates decision in Mexico today. I'm still seeing at this as I'm expecting more downside. I opened my charts today. I saw this pattern over here. It could be an ABC, but it looks like an ending triangle. Since we're expecting a C, I'm looking at this becoming an ending triangle. But what I really want to, and that's why I'm really not really confident about the ending triangle, is I want this to break below wave A, right, 23.19. A throwback could give us what we want, but then again, it would be a little bit squeezed in correction, just say, for another move to the upside. So it might not be the case, but however, what might be the case is that over here, we start getting prices to move lower anyway for further close. Now, I'm getting this signal as well here. That means that we could still go lower from here, and once we meet the RSI, start looking for prices to move higher. Okay, so this will be all for the day. I hope you enjoyed. Stay safe and pay attention to the US jobs numbers today. So see you again tomorrow.